Let's go do the Lord's work, people. The Lord's work in the devil's playground. What's going on? Hey, welcome to the big show, my friends, my people. We've got a lot to do today, so let's get to work. Let's make sure that we got everything that we need to do. All right. So, first of all, we got a decent sized gap down in the markets here, but we are opening up so far at the 200-day moving average. So we'll see if we can get maybe a little hootenanny today for the bounce. Ideally, if you were going to try to bounce today, right, you wanted that gap down into the 200-day moving average. These things are never linear, so if you're looking at the market, you're like, wow, we're at the 200-day moving average, it's just a nice, easy bounce. It may not be like that. It's going to probably have some fits and starts to it, maybe a lot of fits and starts to it. So just be mindful that this is going to be a challenge today. And we're going to have to do, really a lot of the Lord's work to get everything going. So that's okay. That's what we're here for. That's why they pay us the big bucks, sometimes small bucks. If we look today, we've been drifting lower all of pre-market. Now we're kind of bounced up a little bit off this 200-day moving average. But like I said, it's not going to be something that's like super linear. I don't believe we're going to open and then we're just ripping tits. I think there's going to be some back and forth here before it does it. If we're looking at a proxy of, just the general market of how sometimes these things can act, if you look in August, we did, when we kind of tested it the last time, we did rip through under for quite a few points. So it's 430. We got down to 424, so 6 points. And, and then, we reversed and we had a decent rebound, and then we didn't close near highs, though. And, and then we were off to the races. But if you notice here, then the next day, the market, see how it like kind of spiked up, but then it completely faded and kind of got stuck back in the range. And then everybody's like, oh, fuck, it's a bear flag, right? And then the next day, look at this like big, nasty candle here. And so then it was like, oh, wow, like maybe this thing is done, right? Like, we're going to break back through. And then we just started to grind higher. And so, if you kind of look at these things, they're never linear, right? They're never just like coming in and like you're like you see something and you're like, wow, it hits this and then therefore we go. There was quite a bit of like a little bit of drama that kind of comes into these things before you can even, right? Before you can even, think of these kind of bounces. So will it be clean? Probably not. Is there a spot? Definitely is a spot, but there's always a little bit more to it than that. We are oversold, of course, but that doesn't mean much, in the current backdrop. If we look now, let's take a look at at the old VIX. You can see, right, we're kind of starting to pop through a little bit here. And, ideally, at least for me, if we're looking at in August, right? The VIX got up to almost 50 before the VIX got up almost to 50 before it had its thing. If we look at UVXY this morning, we're up about 5%. We got maybe I'd like to see, right, a little bit more of a spike. Even December we got a little bit higher than that. So we want to, right, we want to dig through and make sure that we get a little bit of fear, a little bit of volatility before we can count out the bottom for sure. And you can see here, right, like in August we got this epic spike in this. So just something to be mindful of. I feel like, and this is just more of a gut feeling, I feel like we've had more of a drip kind of action where things are just slowly bleeding off as the market is de-risking. But we're not necessarily, right, we're not necessarily panic mode yet. If you look at the SPY, we are 30 points from all-time high. So that's 30 points on 600. We're 5% from all-time high. So the indexes have not yet shown us that there's a big, right, like swoosh in the cards. And so would love to see the QQQs kind of rip under the 200-day moving average, and maybe the SPY actually tests it, right? And you're only about a day's, so the SPY is a nine ATR, so you're still, you're only one swoosh away from it, so it's not really, it can be in the cards even today. But I think that would set up really a much better scenario. If we're looking at the IWM, I mean, this is just the nasty McGee. We had this awesome breakdown here. I think last time we were doing, we were on, right? We were talking about maybe get some puts for this breakdown here. You got a big rollover here, but this is getting a little bit, right, a little bit stretched, and so we'll see we'll see what's going on here. But it's all starting to kind of, right, just make its way here. What we need to do is just test and hold, and then ideally let the SPY come down and do that too, and we'll have a good spot. But yeah, you never know. You never know till you know. So that's why they pay us the big hairy bucks. Let's go in and take a look now and see if we got any stocks that might be worth a little bit of a gander here. So really kind of watch this action here. Don't be surprised if like the Qs pops up into the VWAP or the 50 EMA and then gets rugged real quick. I think 496 is, probably a decent spot where you're going to see some resistance somewhere from 496 to 497. And then that'll test the resolve of the bulls, right? Do we get that algo? Do we get the pullback and then the algos come on? We haven't seen them to the buy side as we have to the short side at all, right? So we want to be super mindful of that. You want to be really just a little bit mindful of that. Boom, 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 boom. Damn. I think we could get it here, but we're going to need a little bit more pain. And we need to see that we need to see that old VIXie just pop right through, and really make a run for this. Love to see 30. If we got 30, we could get some 30. I think we're at 24 in the, so far, at least on Thinkershit. So we'll see kind of what's going on. Now, if you're looking, like, say you're a gap trader, like you like to trade PRs, you like to trade earnings, all of this kind of stuff, there is, not necessarily a huge amount of stuff to the upside unless you're trading small caps, right? If you're trading small caps, the market cycle for small caps has still been pretty epic, and you're getting awesome moves like every day. It's never been my particular flavor of recent, but you're getting them, So if you want to trade to the long side, you're almost better off trading those than anything else because they're going to be impervious to, even though they're all sluts, they're going to be impervious to tariffs and interest rates and all of this kind of jazz. So let's take a look and see if we got anything else here. But not my particular flavor. Like you see, you have Okta here, which has got like a nice nice range break here. But my thinking, my worry on this is in the current market conditions, is this really worth trying to jam your D on this thing at resistance? I'm not sure, right? Not sure. So just kind of be, kind of keep that into the back of your head. Never in the moment. So, and it's e-liquid. Bum, 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 bum. Dude, all right. Let's get into it. What else we got here? Capper. Hey, this one you got actually like a little bit of a breakout here. Let me tell you one thing, like when the markets get to shit, biotech stocks do tend to hold up like a little bit better than everything else. So you may have um, you may have a little action on something like that. I'd I'd keep it. I'd keep it. Like if you like a little something something like that, you could roll with it. It'd be nice if it had some more liquidity, but you don't always get it in this kind of scenario. Give me 1 second here. Wanna me on the let it in. Look at this. This is the Tesla shorts. These are all the Tesla inverse ETFs. So, if you want to short Tesla, like what more fun way to do it than just buy this fucking $4 ETF and you're good to go. But see, these are all Tesla short ETFs. The fact that there's so many and they all do so much volume is incredible. That's why you really can't read like intraday volume anymore on so many of these kind of names. Boyle, this is the natural gas ETF. And you can see like natural gas and this is probably something you want to probably tuck away in some longer term accounts. You got a big base breakout that's setting up in national in natural gas here. There's I think the probably the futures contract or trading, just trading USD. You can even maybe do some options on it. It's probably the easiest way to get exposure. There's not that many pure play. Not that many pure play natural gas stocks. So there's a couple, but nothing like really that good. TZA, this is shorts the IWM. You get new VINs, SRTT. Look at all this. This is all just a big poo poo platter of junk. All right, let's see on the downside what we got, and then we're gonna just dig right in and see how we can shred today. Look at all this. So, guys, one thing to just be mindful of when you have like all these kind of high flyers that are just getting flooded off like this, right? They may momentarily bounce for a day or two, but they're all done. Like these were all $1 stocks, and that's probably where they go back to. So like if you get like, these names like RGTI, you see anytime they spike up, they get faded off. Like people need that liquidity. And so they're just done. Like they're done probably for they're done till they go back to where they started, basically, And so this thing has got probably $6 more worth of room. You see something like an IONQ, it's like, yeah, it's down 50%, but it was up 1,000%, right? So you still got tons of room to go. I think a lot of these just keep bleeding off. You may have momentary bounces on them. Like, I thought Oklo looked like a good play when it was down here, right? It bounced for like a damn day and a half, right? And then it just kind of flooded down. Once again, these are like kind of zero revenue companies. They're not gonna be, they're not gonna hold that well. So, if you go back and you're like, you want to go back to the playbook that you were doing in the run when the market was hot, that playbook is dead. Like that's not gonna be the playbook that probably, right? That's not gonna be the playbook that lasts for you. So just something to kind of be mindful of. A lot of these names will just die off. They'll die off till the next hot pump comes through. And so, you got to just be a little bit mindful. You see something like this SMAR and it's like, it looks fantastic, right? But, in terms of it's just so oversold, but where can it go? Well, it can go all the way kind of, is it going to go back to $2? No, but it can go back into, where the run started. And that's the natural kind of progression of these things. So, try to not step in front of these things. A lot of times what happens is like, see, when you miss one of these runs like this, your natural inclination is like, wow, let me try to start buying these dips. Like, look at this thing. It's been cut literally in half, right? So it's like, it feels like it's on a discount. It feels like you're getting it on sale, but you're really not, because it was all the way down here. So like this, something like this, does it bounce? Probably. It needs to bounce. It could bounce up into the mid 50s, into 60, something along that end. But like, is it getting back to 92? No, it's not. It's not getting back to 92, maybe ever, right? But definitely not for a long time. Like, it would take, it's going to take, a lot of healing and a lot of other stuff to get that going. So just kind of keep that into the back of your head. Good. Yeah, I know. And I've been wanting to bounce these things too. Like, I saw this thing hold this 50-day moving average, but look at the kind of engulfing candle that comes out of this thing, right? They just get rugged off. The selling begets more selling always. So just kind of be right mindful of that, right? You see something like this pound tar, it was hugging at the 50-day moving average, and then right, it just gets rugged so fast. And so, that's telling you something that about the market, right? That the levels that in a hot market, when you pull back to the moving averages, people just will buy blindly because they'll say, well, hey, you're at the moving average. Like, cool, it's a buy. In a bear market, nobody cares. Those moving averages just end up being areas where people short. They just end up being areas that people short. And so everybody's in opposite day here. So just kind of keep mindful of this stuff as we go through. I think what we want to do is just trade the big boys today for now. I think that's going to be the key. If you see like a lot of these stocks are just breaking down. If you look at Meta here, so if the market gets rugged, right, like you've just been holding here at this 50-day moving average. Because this stock used to be $80, right? Like just a couple years ago. So having this kind of pullback is not really like an obscene thing. And you saw even in August, right? Like it pulled back 100 points, and it was much cheaper back then. So you see something like this, that's a decent short if the market keeps rugging. Now, is the market going to keep rugging? Like I said, we're at the big spot. Now we got to see if it holds. You can see the market's just slowly, right, grinding its way. So it tested the 200-day moving average, and now it's having its bounce already before the market even comes in. So now the key is going to be when it gets into this kind of 496 zone. I would say 496 to 497, 497.50. That's going to be the key spot. If it rugs there and then you break these lows, then the selling begets more selling. If it can just pull back and make a higher low, then you're going to have probably a bounce attempt on this. So just be mindful. This is not a linear market. A linear market is when you're just kind of cruising up the MAs and you're like, okay, every time the market dips, it's a long. This is a nonlinear market, meaning like you have to have contingencies at basically every level. If this happens, I do this. If I see this, I do that. If I do this, I do that. And so it's just a natural little cluster F word of goodness. So just got to be mindful as you go through. This is not going to be like the market opens and then we just rip tits for a little bit. There'll probably be some back and forth filling on this. Now, look, if we need some shorts, I think there's a couple easy ones here that we can do if we need them, right? This MU's got like a big kind of breakdown on this bad boy. Big breakdown on this bad boy. We can play something like that. We got old Dell here kind of cruising, breaking a big level here also. So like these on pops, I think you can fade off. I think Qualcomm looks a little bit better too. You've got yourself a big breakdown, a big breakdown on this thing right at about 152, give or take. Now look, it's a little bit extended, right? And so you do want to be careful, like not shorting into the hole. But look, if this thing pops up and it gets jammed up into some of this area from yesterday, you got a natural short on this thing. If the market breaks down, my inkling is that, at some point we're getting a bounce attempt off this 200-day moving average. The question is the duration. Is it a 1 hour bounce attempt or is it a multi-day bounce attempt? That we don't know till we see how the market acts. One thing to just be noteful of on the price action of the market and what makes the bounces so difficult to hold is that right into the afternoon, we've been fading off a lot of these days, right? Where it's like, yesterday was like kind of, right, 1 p.m., 2 p.m. Like we just start to like post lunch, like we start to really waterfall into these things. And it seems like the Trumpster is like really coming in always in the afternoon with his little speeches. And the speeches aren't really helping, right? So you can see here, right around 1 or 2 p.m., we're fading off. And the previous day, right, like we're at 1 p.m., we start to fade off. And, this is like you're kind of right. If you see a couple days before, like 2 p.m., we start to fade off, and so we're starting to see, right, the kind of afternoon speed ups in a bull market. Like all the actions in the first hour. In bull markets, all the actions in the first hour. You rip a couple trades at the open, you're sitting pretty, and you're kind of done for the day, and you're just doing, you're doing bull market stuff. You're out spending your money. You're like boozing. You're doing all the fun stuff that people do when the markets are hot. In bear markets, the trading goes more into the afternoon as the selling begets more selling. So just something to be mindful of here. Uh, we may momentarily bounce here, and then the key will be, what happens in the afternoon. Once that 1 o'clock hits, that 2 o'clock hits, do we, do we sell off, or do we have like a little bit more? Do we got a little bit more something that comes in? So just got to be mindful. We were down 0.8%, so we've had already a decent bounce on this thing. Um, if we need a bounce, we got Nvidia right at support here, right sitting at the lower Bollinger Band, and you got a gap down. You could try something like this. It's 9 EMAs, not till about 122, so you got a little bit of room. Now, look, this is the cream of the crap. There's no like hot relative strength plays, that you really want to be doing. Not really. Like, maybe you could try Netflix off. Netflix has been holding really well, so that would be the relative strength play, right? Like, you pulled back here and you're rounding through. My issue with Netflix is just a tough trader. It has a lack of liquidity and just a monster cock spread on it that just it makes it real difficult to trade sometimes, when the market gets a little bit shiite. I think another name we could try to potentially bounce if we can get there is this, Amazon right at the 200-day moving average. It's a lot cleaner than Nvidia, right? Like you got the trend, you got an easier kind of pullback, right? Where Nvidia kind of looks a little bit more like, I mean, I got trend lines all over this fucking place, but like, right? Like it's not as linear where it's like you get a trend and then it, happy go lucky pullback, into supports. I think the 200 spot on Amazon, that would be a good spot. We would, it's Tuesday, right? Yeah, you could go out, like, if you test into that, you could go out to the Friday calls or maybe even a week after that. You want to put a little, I wouldn't go too much farther out than that because these aren't like big long term swing setups. There's no base, right? So they're just momentarily couple day trades. So you can go the calls on these things. You can kind of hit these things. Let's say if it taps into 200, you go to like say the 205 or something like that, and you should be good to go. So I think that's probably you got multiple levels of support here. So if you look here, hold on, let me go to a different chart. This was the old breakout spot, right? That kind of took this thing going, and then you went on a decent run. You came back, you retested, you popped up, and so now you're pulling back into this. I think that's the spot, right? That's a decent look right there that we can roll with. MSTR. Let me see, brother. Hey, Zaman, what you watching, baby? Look, I think MSTR is a rundy. It's on the 200-day moving average, but this is like, this is way more of a crashy kind of pullback. It's also more difficult to trade, and you end up making, with the IVs being so high on the options on these things, you end up actually making just the same amount of money as if you traded something more boring. pass. I think coins just in no man's land. This is a sloppy chart, real sloppy chart. Yeah. Look, if this loses 200, then you're probably, you get a little bit more room to fall. But is there like any rhyme or reason to this? Like where you'd say these are clean levels. This is right. This is this is that. No, in general, if you got to kind of tilt your head and close one eye, then you're in the wrong spot on these things. I'd probably leave that alone. Hims is double bottoming at the 50-day moving average and the old breakout spot. If you were going to do something more speculative, then this has the best location of it. If you're going to do something more speculative, this is the best location because you got the second test of the 50 and then this is the old breakout spot. So you got this thing coming pushing through. All right, nice, easy, happy go lucky pattern. You're at a 50% discount on it right now. Now that can get, this thing typically likes to hang out more in the 14 to 20 range. I mean, that's where I would personally probably be a lot more interested in it. But for maybe a trade, sure. Hood. Hood's at a key level here too, right? So this is the old low. And then it had this nice bounce here from 43 to 55. Now, you're retesting into this. Now you're retesting into this bad boy. So you're retesting the old breakout spot. You got a double bottom from the couple days low. If the QQQs hold, you're at a spot here. If it doesn't hold here, dude, this company's a turd too, right? Like it's coming, it's coming back. It's coming back. So you're at a bounce spot potentially. But dude, that action yesterday was so nasty. You can't look at this and be like easy bouncer because yesterday's candle was a monster cock candle. Like it's the biggest candle it's had, right? Like that's the nastiest reversal you're going to have to go up from 10% to down 5 or 6% or whatever it was. So this bounce here or breakdown is really just dependent on, right, if you think the QQQs is going to hold here or not. Right? That's all it is. It's not really a good stock, bad stock, good chart, bad chart. It's none of it. It's just if the Qs holds, it's at a spot. If the Qs don't hold, it's flushing under that spot, right? And so you just basically are at an inflection point where you say, if this, then that. If that, then this. Nothing more, nothing less. And, on a longer term side, probably it's going to turn into like a Head and Shoulders or something like that. Bachu. Look at BTC here too, right? So after that Trump pump, right, you get a nice pullback into the 200-day moving average again, right? So you got a double test on this also. So that'll be a clue too to see if the risk is on. If the Qs holds the 200 and then the BTC holds this 200 again on the retest, then you might have something. But till that happens, probably a little bit of a nothing. For most of you guys, this is probably the market to just sit out, unless you're just scalping around. This is not a swing trader's market. So if you're like holding stocks overnight, I mean, beyond just being a world-class moron, you're really, you're playing with fire, right? Like you're playing with a lot of fire because you're just, what's going to happen. You could have the hottest day. Like the market could rip 2% right now at the open. Come 1 or 2 p.m. in the afternoon, the Trumpster's going to come on. Hey, guys, okay. The country of Bhutan is fucked. Tariffs, here we go. There are smelly people. And right, next thing you know, here we go. The market's rolling back over. We're just in a new cycle where some of this stuff is happening as we kind of work out all this excess as the market's been too extended for a long period of time. So you could have a hot morning, but you still may get rugged into the close. And so there's really just no point. there's no advantage of doing any swing trades right now in dealing with the gaps and the stress. There's so much volatility in the market right now that you can just scalp, right, for 1 or 2 hours and make really the same, you can make the same returns. If you look at these end of day fades like yesterday, right? Like, look at this shit, like on NVIDIA, right? Like, you get these end of day fades, dude. Like, I mean, that's had $13 range yesterday. Like, that's pretty damn good right there, right? Like, why even mess with the swing trading when you can get like these kind of, right? You can get these kind of ruggy McGee's. Yeah, you look at all this stuff, right? Like, it doesn't matter. Like, every single one. Look at this, like, hood, right? Like, you get just like big gap up, pulls back, and then bam, like, you're just coming in, like, right, pattern after pattern, bear flags galore. Like, everything is just cooking and booking, and you don't need to necessarily do right in any. You don't need to do any swing trades per se. Look at this TSM, right? Like, it's like Trump made that announcement, and it was like wham, like, here we go, and then boop, fucking rug, right? Arm, like, right, just it opens at 133. I mean, you don't have to do any swing trades when you see something like this, but you can just day trade and make the same kind of returns, right? You got this thing's at 133. All of a sudden, it's just right, bear flag, right? Bear flag, and it's endless. So to be mindful, like, there's really no advantage of it. Now, all of these stocks are, of course, at some levels that, maybe we can trade around soon. Even like something like this is starting to get real stretched. You get this thing down closer to 110 or something like that. I mean, you're gonna get yourself a little hoot nanny for the stretch, right? You just got to pull this thing out of the lower Bollinger Band just a little bit more. Yeah, PLTR is like got a weird spot on it, right? So it's like, you've got kind of like a 2 day, you got a little consolidation here that if it breaks under, like, you probably drop pretty fast. These kind of high flyers, the ones that are super bloated, they drop really fast, and they don't really have like, these epic, like, kind of bounces the way you think, because it's just getting sold off. Like, is PLTR is probably not that different than like Oklo, right? Like, fucking, it's probably really. I mean, this thing was $6-7, right? Like, just a couple years ago, and the gaps on this thing have been huge. Tesla is also right breaking back under the 200-day moving average. Big monster gap on this thing too. Big monster gap on this thing too. Look at that, 4%, 12 points. So it's already used up most of its, ATR in the pre-market. So if we need bouncers, maybe we can try this on the remount of the 200-day moving average. But to me, this looks like a bear flag now, right? It doesn't really look like it's some like hot little bouncer. It was a couple days ago, but it got rugged yesterday. It did. So it did have its 200-day moving average bounce, right? You hit 272, it popped 30 points. Now it's re-rugged all this. You just got to leave it alone. Boom, 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 boom. Da, 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 da. All right, we're starting to open up here. So let's see what's going on. You can see the Qs is pulling back a little bit. It ran into the 50 EMA here, and now it's starting to pull back. That's nice. Real nice. That's nice. Real nice. Hey, Randall, what's up, baby? How are you? Yeah, so what we want to see is, okay, so we had a decent pop here, right? If you're a bull, you want to see some rug down, but then you get the higher low, right? And you start to build above this low. you get a little higher low, and then you can potentially try to get this thing long. On the SPY, it doesn't look like you have that, right? You have more downside here. You have still room, 5 points to the old low of January, and then you've got more room down into here. That's my one worry on the market right now is that you'd like for the SPY to also be kind of pushing down into that 200-day moving average. And it's just been hey, hey, thank you, Randall. Thank you. Hi, Dad Boner. I appreciate that. Yeah, you want this thing to be a little bit lower, so we'll see what's going on here. But be nimble, trade fast. That's all That's all we can do. It's a great day trading environment. It's just a shit swing trading environment. And when I say great day trading environment, I mean like there's a lot of volatility, but it's not easy, right? For me, a great day trading environment, at least for my students, is like when the market just goes straight up and they can just sit there and draw lines on their charts and throw darts and they're making money feeling good, right? A line drawers market is epic. We're not in a line drawers market, that's for sure. Like we got a little bit more that kind of goes into this stuff. Hey, Zaman, let me look at this VZ. You talk about fucking Verizon, huh? You damn old man. Hey, so this is probably like more of a defensive stock, right? When the market's taking a shit like these kind of things, it's almost like a utility. You can roll with it. I wouldn't be opposed to it. It's just not my particular flavor. Yeah, the ATR is like 80 cents on this thing, but you can do it. Like if you don't mind scalping for you don't mind scalping for 30, 40 cents at a time, go for it. And you can see right there, it's almost like they're moving, but they're just grinding it. I mean, that was kind of a hot setup. You're right. All right, good, 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 good. Well, let's go do what we got to do, folks, which is the do. Hey, rock and roll. Cool. Zaman, you're only 27? Persian pirate? I feel like I've known you your whole life. PP. All right. Dude, Persian pirate. That's amazing. What a nickname. I wish I had one like that. You're a pirate of like sandstorms. Do they have boats in Persia? Do they got boats over there? Bachu. Hold on. I see somebody. Hey. Somebody's knocking on Daddy's door. Hey. TT. Hi. No. Hi. Hey, my son. I love you. You're my Batu. All right. All right, let's go do it, folks.